Hey traders, Nick here looking at Lucid. Congrats if you were long into the pop. The point of this video is to see if we can draw new levels or find next action lines. I'm not going to delve into the fundamentals. You know what you know, I know what I know, and it doesn't really matter. This is strictly talking about the chart itself. Assuming success continues for the company. How about that? Fair enough. That's happy for everybody. Warning, this does contain chart pornography. So I'm going to show you the lines I've drawn. I don't remember if I did a video on it last time or not, but anyway, this is what I've shared with the members and in the chat room. If you're interested, I'm not taking new. We're at capacity. We have hundreds in there, and I don't want to grow it to be too noisy. Maybe I'll feel generous and put a link somewhere if it pops up on the screen. Then take advantage of it to join us. So here are my lines. Most recently, we realized that there would be a breakout if they take out prior fails, and those were the two most prominent prior fails. And guess what? They have been prior fails for a while. So this was a classic breakout. If I chased it up here, then if somebody chased it up here, then they didn't see my comment for this big box that was drawn around one candle from February 23rd. One candle draws this whole range. That is an outstanding candle. I mean, if you heard the term doji, this is as big a doji as they make. Let me try to explain it to you in plain, simple English. I'm not a chart guy from Wall Street. I learned this stuff all on my own. This candle right there. So if I take all the lines out, so we can clarity, this candle right there. So this is one day, and let me put it in plain, simple English. They opened here, and they loved it, and then they hated it. And then they said, you know what? We have no idea. Let's just close it where we opened it. That is a tremendous amount of indecision. And it tells you how far they're willing to take it up and down. So that's the range from 223. And let's see where it failed this time around. Failed. Put that where it stopped rallying. So not to upset anybody. So here we go. The highest point was 41.5. Just below the range from that 223 candle. Oh my God. Okay. So look at the week before it. So I'm going to estimate what, 217? What is that day? 212. Look at the top. The high of that day is 41.37. 41.60. The high from a couple of days ago. So there's no coincidences. We got this candle here, we got this candle here. Where they failed is the box where I drew that. I drew it months ago, saying that this was important from this candle right there, February 23rd. And since then, that whole range has been difficult. And I had a line drawn at where it is just now, just above it. So now we know that this is where the tough shorts are. So where is it a good buy from a trading perspective? So when a breakout happens like this clear, usually, more often than not, they go back to revisit the neckline. I'm not making it up. That's what happens. You break out, you come back, you test it for footing, you go a little bit lower. That's okay. It doesn't mean like, oh my God, it went $1 below the breakout. It's off the table. No, they're still making progress. Higher lows. So even if they get down to this area, it still doesn't take away the breakout. Now, I'm not a big fan of the stock. I love the car. I'm not a big fan of the stock as an investment, especially not at these levels. So I would not be buying it here. That's personal preference. So if you want to make comments in this section, just leave out the cuss words. That's okay. You're entitled to your opinion. From a trading perspective, from an investment perspective, I did the math and it doesn't make sense. $34,000 maximum capacity currently, I think, planned. So the exuberance may be too far. Just in case it is, I don't want to be on board from up here. Down here, from a trading perspective, I'm interested. I have traded it before. If it falls below 30, I start looking. If it comes down to 26, ideal place to get long-ish, especially the way I do it. And how on bad days I would like to sell a put spread as a trade. This way I would leave room for error. Not planning on doing it anytime in the next couple of days. I won't even touch it unless it comes back to here. But that's my personal preference on how I would trade it. I'm not giving you advice on how you trade it. But if my brother comes to me yesterday or the day before that or the day before that, did you hear Lucid, blah, 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 it's at 38, should I buy it? Heck no. Let it run without you, because, and here's the simple statement, not an insult, this is not an obvious point of entry. Not my opinion, fact from back then. Exuberance was as high as it gets up here. So this is similar, only with a little bit of news that they actually delivered one of their top line 500 models they're going to deliver now. So this is not my opinion. I look at the chart. Fact, last time it was here, it failed. So not an obvious entry point. It doesn't mean it can't go to 55. I'm just saying it's not obvious to me, and I would rather skip it for now. I would rather see them go back and test the footing and look, strong base. You know where is the line where it's had the most action? Again, fact, not my opinion. I'll give you a second to see if you can find it. Hint, it's drawn, not by me. Everything else is drawn by me. This line right there, that orange line, the most action it has had is under $24 by a mile. Look at it. Those are volume bars. Same volume bars you see down here. Only these tell you when they happened. They tell you that this week and back then there was a whole bunch of action. These bars tell me where they happened. So 24 is where they're most interested in it. You think they're going to let it go that easily? Chances are they're going to come back close to it to use it as support. So this whole zone is supportive. If my brother comes to me when it's falling down here, hey, I'm thinking of buying Lucid, I say, hey, you have my blessing. If you've done your homework and you believe in it long term, buy it, buy call spreads, leave some time on the table, but make sure you stop out at X% if it doesn't work out. As a trade, as every investment should have. Shouldn't be just a blind faith buy. All right, so that's enough talking about the levels. The fundamentals, the macroeconomic conditions are still okay, so the market can still rally, even though we have a Powell event tomorrow. The EV market is still viable, even though I think we're limited by our battery capacity eventually, so we can't flip to completely EV because we need 80 million vehicles a year. Every year, we don't have that many batteries. That's my personal opinion. So the EV market has to have a breakout in battery technology, maybe QuantumScape, but that's a long shot. I'm an electrical engineer, and what I'm reading about QuantumScape, it's hard to put a solid state battery under load for an EV in any conditions. So it may work on a smaller scale, somewhere perfect weather conditions, but you know, we need something else. A hybrid model of sort, I don't know. Okay, so enough about it. Great cars, no insults there, please. It's not a Tesla killer. You would be insulting Tesla if you would even mention the two in the same sentence from a business perspective. It's not even a NIO killer. NIO already does almost 60,000 vehicles a year. If you double the Lucid maximum capacity that I read they're going with, you won't even get to NIO. So before you take out the champ, Tesla, you have to fight the ranked 2, 3, 4, 5, 6, 10. So Lucid has to earn the right to say it's a Tesla killer. Just like they called, if you remember a while back, they called GoPro the YouTube killer because they had some sort of a channel where you could post your own videos on GoPro. Website. The stock was 90. I shorted it that day when Kramer came out and said it's the YouTube killer or whatever. That was it. So Lucid is not a Tesla killer. Tesla is Tesla. And it's in a completely different ballgame. It does $6 billion in cash from its own operations a year. Yep. So they're not in the same ballpark. they're not competing. There's enough room for all of these EVs to prosper if you're going to switch from ICE to EV. The internal combustion engine is still the king. EV is the challenger, and it's still a tiny fraction of the whole shebang. I think 3.5 million cars a year versus 85 million a year. So that's a lot to swap. And Lucid can sell all of its cars, and Tesla can sell all of its cars, and NIO can sell all of its cars, and XPEV can sell all of its cars. You get the idea? Volkswagen is going to be a monster in there. I live in Tesla land. I live in Southern California. Every other car is a goddamn Tesla. And now I'm seeing a whole bunch of Audis. So that's VW coming in fast. And a fewer BMWs, and a whole bunch of Mach-E's, Fords. So there is competition, but I think there's room for all of them. So nobody is anybody's killer. They're just completely different cars.